Yeah, so we are live now, we are recording. So we want to introduce natural gas to list of our portfolio to you. It is part of the instrument available on for commodity traders. It's big. So natural gas is one of them. It's also profitable and predictable. So now this is just a short note to give you a proper understanding of the things you need to know about it. It's not too hard to trade. Yeah. Then as it's recorded, you can review it over and over again. Like I call it a guide to understanding market trend and strategies you can use to trade natural gas. Then why we say it's good is that it's also a very active market. Now, there are some things you need to know about it. One is also a volatile commodity, the same way we have in crude oil. Volatility means liquidity. Please take note. When we say something is volatile, it means that something is liquid. Is also it connotes liquidity, but not in crypto. Crypto volatility does not connote with liquidity. I would say some crypto volatility does not connote liquidity. You know what I mean? Because of most of these crypto guys may do pump and dump. So it's not that market is moving based on investors participant, but in the regulated instrument, the one we are into, the volatility connotes liquidity. It means more investors are putting more money. The market is moving accordingly. Then there's also a trading method you will learn. And of course, you could trade it on future contract, New York Stock Exchange, and ICE. Some of you are already with us. I will encourage you to keep moving with us because there will be a time you're already there. The time is supposed to be trading directly with the companies we are trading with, and you have some of the execution executed through the New York Stock Exchange. Like we have future contract futures. I'm sure none of it is on it. But in case you're a big investor or you have money you think you can invest, you can discuss privately with us. We can give you all these options. There is actually a profitable, all this is a profitable ventures. For the fact that you don't know them does not mean that it does not exist. But you just have to know, ask me. We may not know your mind, and you cannot just push all of them to your desktop because we're just here to teach. But you should be able to know all these things through us because the more you know, the more you grow. Then you can also trade them on CFD contracts. So this is where a lot of us are involved. You know much about CFD contract because most of the CFD brokers are accessible, and you all have account with them. I'm sure some of you have more than one account with different brokers. Then you also trade on as ETF. Some of you don't have access to ETF, but we have access to it, so it's easier. Through us, you can be able, not our traders, you know that I'm a trader, so the brokers we work with, we have access to those markets. So you can also trade it on ETF. Then, of course, you can trade. This is not really common, but it's also another way you can trade them through the stock of natural gas companies. You know that natural gas companies, they are also listed on the stock exchange. So you can invest through their stock. The more they are performing, the more you begin to make more profit. So these are the ways you could make money, or you could trade it on natural gas. Technically, what could be accessible to you could be first CFD, which is already common, and future, which is also there. It's not that it's hard. Just open an account and switch. It's as simple as that. Then you begin to trade future contract through the New York Stock Mechanized Exchange and the Intercontinental Exchange. For me, I like to explore, and some of these things, the more you grow to all this market, the more it become less risky for you, because CFD seems to be a bit more risky than futures. I mean, contract for they look similar, but CFD looks a bit more risky than futures. Then another thing you need to know about it is the strategies we use in trading natural gas. You are the one that inspired this class. Please take note. It should be the best learner. Lemon, sorry if I get your name wrong. Lemon Kocha. You're the one that inspired it to come up. We had it since, but we never fix a time for it. Please make sure you take more notes than every other person. So these are the strategies you need to trade natural gas. One, we'll be following trend. The same thing we do on oil. So when we are trading natural gas, we also follow those particular trend, what is happening in the market. The trend is not just also on the market, also the economic trend, what is happening around the natural gas industry. You remember, it's a sub commodity to oil. I mean, crude oil is their mother body. So natural gas is one of the sub products available. Then we will focus more on this one, another key strategy, breakout entry trade. But now this one is another one you focus on seasonal trading, leveraging on seasonal demand fluctuation. This is a key strategy you will look out for, like the demand fluctuation in natural gas. And for the meta-analysis, using supply and demand. There's no direct news. Take note, the way we have news on oil, news, we don't really have it directly on natural gas trading. Please take note of that point. So you may come to internet, you see forex news, or you see crude oil news, but on natural gas, you may not consistently see it like that on natural gas, but you can see the level of demand and supply on it. Natural gas is like gold. There's no, you won't see much news on gold, like fundamental news on gold. So because the mainstream media does not really focus on those asset classes on giving us news, but we can use that's a way you can be able to know the mining demand on gold and or following other economic realities on other asset classes. You can use it to produce the price of gold. For example, gold is used for hedging. I've said that several times. Anytime there's a crisis in the world, gold will rise. That's similar thing with natural gas. So there are some certain times that may be a crisis that will affect the oil producing areas. Then you see that, or the natural gas plant areas, then you see that the price of natural gas will rise. And also you can also see the level of demand, which is the major fundamentals about natural gas. That's why it's easy and it's predictable. They don't have complex analysis where you have to read more than 10 different analysis from different people before you can make a decision. No, it's a straightforward analysis. Do you understand? Have I given you guys tips on how to know the mining demand on gold or the website?
No.
No.
Okay, just remind me. I will search it for it and send to you. That's where we used to get. I won't get it to you now because I'm on natural gas. That's where we used to get the level of demand on gold. So it help us to know, okay, these guys are buying more because it's a different sector. The same way we have it on natural gas and crude oil. Then there are other factors that affect natural gas price. This is what affect the price. Now, you still have to pay attention to the same body, EIA reporting. That's production level and storage report, which is technically connected to demand and supply. Then weather condition too, which I've just said, is also like affecting the heating gas and cooling demand. The weather condition, this weather condition, now we are approaching spring within the European zone. They will move to springtime by March. After the spring, they will go to they go to summer. After summer, they go to autumn, something like that. During the spring and summertime, there may be warm temperature, and they will not have much demand to be subscribing to the energy bill, also using their heating in their houses, and it will affect the supply because people will not be buying more, and on this time, the price of natural gas tend to come down because demand generally has gone down. But remember one thing that may not be on my note: the price is regulated because it's a major consuming commodity within the Europe and America and and cold areas. So their government, that all those government regulated so that the masses will not be at high risk of purchasing it on maybe on a higher price due to unable to regulate the inflections. They make sure they properly fix it so that the low income earners can also afford natural gas, afford the heating bill, and able to live their life without that dying. So this is regulated. So using that regulatory price structure, it's easy for you to make a predictable analysis and make profit on natural gas. Then another factor that affects is industrial and residential usage of natural gas, which we'll be able to give to you. Immediately I go on internet now and show you some of the things that you need to know. These are the key factors that have to be registered in your mind if you want to navigate natural gas. Then there are other factors that affect it, like OPEC decision. OPEC decision and crude oil price movement. It affects the natural gas, the decision and crude oil price movement. Then global conflict. Now, the issue is that I'm giving you a key point. So in more learning research, we will now ask ourselves, how does the price affect it? Is it that when the price of oil is rising, it will fall, or when the price of oil is falling, it will rise? These are the things that you now have to ask yourself, how does it affect it? Do you understand? Is it that when the price is rising, it will fall, or when the price is falling, it will rise? And from there, you are now started learning a strategy to understand it. So if you see, you can use the price of crude oil to predict the price of natural gas. And vice versa, depending on how they said the price of oil affected the annual oil movement. It's already a key strategy, already make it like a key expo they have given us automatically that the price of crude oil affect the price of natural gas. We now ask ourselves, is it do they go opposite direction or the same direction? Then from there, you have gotten one key strategy you can use. Global conflict, like trade policies and LNG export. Now, these are another thing that affect natural gas. But one thing about this particular one, you see this particular point here on natural gas is this. Because of lack of consistent news, the news may be coming once in a while. Anytime there's a conflict, maybe you may see it on oilprice.com or Bloomberg or any other channels that is that we can get it, but it will not be something that will constantly come on board. So of course, but the experience so far, you should know the one that will be most likely be available on natural gas. Now, there are best time to trade natural gas. One is the same time we trade crude oil, which is around 3 p.m. or 4 p.m. The New York time around 10 a.m. Now, the report comes out Thursday, 10:30 a.m., which is about 3:30 p.m. on our own time. So the first time to trade is during when the report comes out. The storage report. The storage report is similar to inventory report on crude oil. So as a natural gas trader, you also be considering the storage report. Then peak demand season, which I've said before, and the market opening sessions like the New York and London section. But the most important one is this one. You see this one is the most important one to trade oil, natural gas. But if you're a long-time investor, and that time is this time because of it can be buying more when there is a hot weather. By that time, the price will definitely go down because demand will be low. So big companies used to buy that more. Then during the cold season, the price goes up. Then automatically you're making profit. All these asset classes that has seasons, it's difficult for you to lose money with them. Unlike forex that doesn't have season. All these business that has season, it's difficult for you to lose your capital with them because there's already a season, you know that the price goes down, and a season, you know that the price goes up. For example, I don't know if any of you is into clothing. You know that clothing season is mostly December time or festive period time. Me personally, because of high demand of family and the extended family, whatever, I used to do my shopping before December. Around July or August, I've already ordered anything I want to use because of that December time. I have to pay double. including rice and some other items. They used to go up. So I used to order them earlier. Now, that is also a similar thing with the major dealers in clothing. They used to go to market early, maybe around June, to buy their December sales product already. They'll get them at a cheaper price. So that December time or the festive time, the price will most likely even double or go up to 50%. They will sell more. January, they don't use to sell much in the clothing. Even in rice, right, in food business like rice, they don't use to sell much because people have already bought all the rice for festive period. I know some of the people then, they used to go Christmas, they used to go holiday on January because December is their season time. They don't like to go to village or go on break. They keep selling. Once after the new year, they will not lock their shop for almost like 1 month, almost like 1 month, because they said people doesn't come to buy clothes then, and even other stuff. Now, such kind of person can hardly lose in that business, unlike based on predictable market demand time. That's also how you as a trader, you need to know those things. If you trade on natural gas, the best time to trade it is on a daily basis or weekly basis is based on the storage time, the storage report time, and on a long-term basis where you accumulate your position is during the winter time, the summer time or hot weather season, when the price has extremely cooled down, then you can buy more of them. Winter season, it will go up. Then remember, you have already bought before, then the price goes up and you cash out. So you can be a long-time trader on natural gas and you make a lot of profit. Then on a speculative level and the retail level, consistent trading, during once the market open per day, you just cash out the more the one that you want to cash out, and that's it. Then you know this one already, so I'm not showing you this one. Then, so these are the symbols. So different broker you're using may give you different symbols. So if you check your broker platform, you may see something like this. So NGS, then nat gas. Some broker give you to you nat gas directly, so you know that this is natural gas. Some also give you NG. Especially on the future market, I think on future market, if I'm able to open future market for you now, you see how future platform, you see that it will show on NG. Then some other broker can give it to you NGAS. So I don't know if have you seen something like this on your platform?
Yes, sir. Alba Trade is natural gas trader.
Oh yeah. On our trade, they use nat gas as their symbol. So
Sir, please, can you just go back to the previous slide, please?
this one.
Thank you. Yes, just 1 second, please, sir.
Oh, you're taking note?
Yes, sir.
Okay. Are you done?
Yeah, finished. Thank you so much.
No worries. So now the conclusion, it will require you as a trader to employ the concept of technical and fundamentals. I've already told you fundamentals, which we'll study immediately after now. Then supply, which is also, the supply and demand is part of the fundamental and maybe the regulation that drive the price movement. Of course, all of us, we must also associate ourselves with the risk. So these are the things we will focus on. It's not a complex instrument. Take note, it's not something that's too difficult for you to understand how it works. It does not require you to have multiple analysis before you can arrive at a conclusion. So let me know if there's any question on this one and what you have learned now as a takeaway, because you may not have gotten everything that I said. Then, because I'm moving to another platform. So any question?
That is the storage report work like as the work on oil, on crude oil.
Yeah. Storage report works the same way as it works on crude oil.
Okay.
So let me ask, has anyone learned something from there?
Sir, please, I don't know. Can you open maybe former storage reports, past storage reports, so that we can see maybe how it works, if it's higher or like, I don't know. Just as you teach us on crude oil inventory.
Are you seeing my screen?
Yeah.
What can you see there, please?
I'm seeing US natural gas storage.
Yes. So guys, to get a report on natural gas, you can use investing.com. You can also use Forest Factory or directly on EIA. This is the EIA report on natural gas, the overall report on natural gas. But for me personally, I prefer using this one or Forest Factory, but mostly investing.com. So now, you that's asking me, promise, please, can you read for us, please? Just read here. Read here. We are in a Bible class now. I'm so apologies to those who are not Christians. So can you read that place now?
Okay. The Energy Information Administration, EIA, natural gas storage reports measured the change in the number of cubic feet of natural gas held in underground storage during the past week. While this is a US indicator, it tends to have a greater impact on the Canadian dollar due to Canadian feasible energy setup. If increase the natural gas inventory is more than the expected, it implies weaker demand and is bearish for natural gas price. Natural gas price. The same can be said if a decline in inventory is more than expected.
Go ahead. Okay. So yeah, no, probably you cut off. So there is a similarity between this one and the crude oil inventory.
It's the same thing, almost the same thing. But what I have not, for crude oil inventory now, I think I understand about the more supply, because I have practicalized about when the inventory come out and is more supply. I have watched the technical, put it in practical. To me, it works 100% to me, or let me just say 90% for me. But this natural gas, I have not understand. I don't know if I can still understand this the same way I understand the crude oil.
So this is probably their first time of coming to natural gas. So you have been on oil for more than a month. So you have been able to study it consistently and understand some things. So now, from this starting point, now, if you keep observing natural gas, then you'll be able to build up a strategy for it and see that those forecast and analysis works accordingly.
Okay,
you understand?
That is true.
Yeah,
yes,
so
that is true.
So now, generally, our first introduction into natural gas, or first exposure into natural gas in a formal way like this. But I second something. Is the report comes out weekly, the same way it comes on oil. Please take note of that thing. And why this is a US indicator, it tends to have a greater impact on the Canadian dollar. So that's the major difference between it and the crude oil inventory. Due to Canadians' sizable energy sector, because Canada has a lot of oil. Do you understand now? So now what this analysis or statement meaning here is that the level of reports on natural gas also affect the price of can affect the price of Canada. Now, I mean Canadian currency, that is US Canadian dollar. Do you understand? So the level of supply or demand available can affect it. So you pay attention to this particular statement when we are analyzing demand and supply. And technically, if you're a US Canadian trader, if you're a Canadian dollar trader, then you now pay attention to it, because the price of natural gas is also another indicative factor that can affect their currency. Now, this was their actual supply. Now, this was the previous forecast. I mean, the actual forecast, this was the previous supply. That was minus 100 billion before, and currently that is minus 196 billion. So they were expecting 191, and what happened was 196 more than what they were expecting, and it's on negative. And the next report will come up on Thursday. Yeah, on Thursday, which is tomorrow, because of the previous one came up on last week Thursday on 20th. So it comes out every Thursday. So technically now, if we started trading on natural gas, I don't know how many of you have been interested on natural gas. So we may be having maybe energy classes maybe on this Wednesday and Thursdays more. Oil price rise from 2 months low on inventory drop. Okay, I'm seeing some flashing news here. Oil price. Any question? I want this class to be very much interacting. I don't want people to be quiet. But if you're at work, fine, I can understand. If you ask me a question, I will know that you are learning. You want to grab something. Because any question you ask, you can never forget it. You can never forget the answer. So now,
Okay,
this is
hello.
okay.
Hello, Ms. Uche. Okay, just for clarification, what you are saying is that if there is oversupply, depending where the price is for nat gas, which as a result of oversupply, which is sell. So what you are saying is that on the currency pairs, you have Canada, like USD Canada, it will equally affect it.
Yeah.
On the direction of the natural gas.
Yeah.
Okay.
Yeah, because of natural gas, because of Canadian economy is tied to their commodity like the oil and gas, because of they're one of the major producer. Do you understand? It's like technically AUD. Australian US is a commodity-based currency. So the commodity price within those areas affect the price or the strength or weakness of their currency. Any other question or clarification?
Yes, I wanted to ask, how does it affect the Canadian dollar? Like, can you give us an instance if there is oversupply, if there is undersupply? How does that affect? How does it move Canadian dollar?
Now, good Canadian higher oil price helps Canadian dollar economy, so the Canadian economy. So can it boost? It shows a sign that their GDP and the trade balance and the other things is doing well. So it will give them strength. So Canadian economy, Canadian currency will rise. Do you understand?
Yes.
So now, lower oil price, lower natural gas, this will affect them because of they are the producer. So really, they are the supplier. So the more better price like the more good price they sell, better for them. They're not the buyer.
Okay, sir. Okay, sir.
Do you understand? So they're not the buyer, and the system is structured. The economic system is structured to reflect on the strength of their currency. Because of one of the major economic activity in Canada is the natural gas. So the more the natural gas price is okay, the more the industry is okay, the more they make more income. So now, if you're a trader that trade US, Canada, so you may now start paying attention to the information on natural gas to be able to build up strategy. This is what makes you a good trader, advanced trader, a good portfolio manager, not a speculator. Especially those of you that want to advance this career from individual trader to institutional trading. Some of you may one day apply to work with company, also talk with trading company that is decent, good trading companies, not the one that don't know what you're doing.
Okay,
any other question? Yeah.
Okay, based on this analysis you just gave, based on this insight you just gave now, I think gold equally has a relationship with USD. The kind of report that comes out equally affects it. Because if you check yesterday, I don't really know but apart from the news that came on around 4:30 thereabout, which automatically, which it was a negative, which automatically, because I noticed automatically even the gold itself dropped heavily, and all US pair. I think there's a relationship too. Gold.
So what do you think is that relationship?
The same relationship of nat gas and the Canadian pairs.
Is it like
I think because
it's a personal opinion, no.
No, you are right. But I want to know whether it's boyfriend and girlfriend relationship or side chick and husband or somebody's husband relationship.
I feel since please, Mr. Promise, are you talking?
No worries.
Thank you. So I wanted to say, is it more of a relationship? Is Mr. Uchesi here?
I'm here with you guys. I think my camera is on. Are you guys not seeing me?
No, sir, I'm not sure. I don't know about others. So I wanted to say, is it more of the fact that since gold is like a risk, or is it risk of asset in the sense that obviously people hedge with it? Same thing with dollar or Swiss franc. Since dollar is a reserve currency, so people mostly run to dollar when there's uncertainty. Or
yes, I will explain that. But give me like 1 minute.
Okay.
Sorry, one of our staff came in and was giving me information. You were asking the question, the relationship between gold and the other currency. One, One of the relationship between gold and the US dollar is one. Gold is paired with the US dollar. So we use the US dollar to value the price of gold. Do you understand?
Yes.
Two, gold is used basically for hedging. Gold is used for hedging. So when there is a crisis, gold price, when there's a stability in other asset classes, gold price will fall. But when there's crisis in major asset classes, gold price will rise. Do you understand? So gold is used for hedging. So when other investment classes okay, doing well, gold will be in trouble, but not necessarily in trouble because many people like to hedge with physical gold. So the second relationship is that, or is that price of gold being tied with US dollar. Now, technically, there's also gold is also tied with other markets like AUD also has a relationship with gold. Yeah, AUD, but on a general level, it is measured with dollar. But let me tell you something. The price of gold, higher price of gold, low price of gold does not affect the dollar. Cynthia, I don't know whether you're listening to me. The price of gold does not affect the price of dollar economy, whatever. Rather, the price of crude oil affect it. Oil affect the price of gold, affect the price of other asset class. Oil is the major factor that drives the world economy. Even currency that doesn't have anything, that does not have oil in them, and like some country that doesn't have oil, the price of oil affect their currency. So oil is a major driving factor. It's a major source of energy to the whole world. It can never relate that. But gold does not affect the world economy, or even currencies like that. No, it's oil that affect them more. Do you understand?
Yes, sir.
I'm sure you guys are in the office, so I'm not judging you. So now, before we go into technical, so on Forex Factory, this is also where you can get the focus on natural gas. You see, by Thursday, 27th February, the natural gas the report will come out, and they're expecting minus 127 billion. 127 billion against the one that came out on 28th. I show you on investing, which was 196 billion. So we mean that there's going to be more shortage. That's what they're expecting, more shortage. So they're expecting 276 billion against 196, more than like 100 billion shortage coming up into the industry. I mean, like 100 billion shortage that's coming up in kind of reporting. And now, let me ask you, 276 and 196, I think this is 276 is more deeper than 196. No, be so?
Minus 276, I think, is lesser than minus 196.
No, it's deeper. I mean, bigger.
Oh, deeper. Oh, okay. Yeah.
Yeah. Minus 276 is deeper than minus 196. So it shows that there's more negative coming. They're expecting more negative coming in. So now that means if that happens, there may be significant rise in natural gas more. So I will call it maybe 196 cubic, because or 196 billion cubic, like cubic, because it's not measured in, it's not necessarily like measured in barrel. Now, remember, it comes weekly, and consistently there has been a shortage of supply, like for a very long time now. This is very easy. If a trader and you have had series of heartbreak from relationship that make emotion to go down, you'll be a good trader because emotion is already dead. So you don't have any feeling for anything again. Or that does not have feeling for money, you'll be a good trader. Now look at consistently, there has been consistent like shortage of natural gas, which is a very good sign for buyers. Or remember, it can also affect, okay, let me go to the chart and see what the chart is saying. I don't know if this chart is making sense.
Yes,
Yes,
yes.
sir.
Now, let me go to the chart. You can check your own chart. I don't know the chart you are working on. This is not gas. Yeah. Let me go on weekly. I already know that the price will be high. Let me go on weekly to see how the movement has occurred. How many weeks? 1, 2, 3, 4. 4 weeks it's been up. On a daily, on a monthly, let me check monthly. Monthly, how many months now? 1, 2, 3, 4, 5, 6, 7. It's been up for 7 months, even though the last month was in the positive, but it still end up at a higher price. Okay, you see, so the price crashed to 2.314 or below 2.314. So there's already like a potential recovery. So the price came down from here, from around 9.15. This point is where the price came down from. That's a couple of months ago. 9.15. Then it's actually, that's all even like potential sign. That may be why there's consistent shortage. That's like a potential sign of this market like going more. So, and technically here is obviously a base, like strong demand base, like a demand zone here. 2.3 and 1.3 is a base, strong one. So because this has always the last price since 2014, this is 2014, the lowest price 2016, 2019, 2021, 2023. Are you seeing what I'm doing?
Yes, yes.
So you see that since about 7 years now, or more than 7 years, so the least price, I mean, like the lower price buyers demand more is around 2.3 or 1 point between this price. So it's easy. Then remember, I'm on monthly chart, but it does not matter whether it's daily or monthly, but it always tell you that this has been the level of demand, the price, people demand it more. So technically it means this market has more chances of hitting 5.247, 6.22, and all of that. So now it means this is one of the reasons why the price is rising. It means there has been a consistent shortage of supply here. So you see, you know that although this is also on investing, so they give data of what is happening. So there will be consistent shortage of supply. So if another one comes up, it most likely it will go up. So technically now, what is happening here is that there are potential bullish sentiment, and which is also supported by shortage of supply. And this shortage of supply could be politically supported. I mean, it could be like a conscious effort by the OPEC to make sure that they keep cutting supply. You can do that research by yourself, but I will research more of myself too. I want to know why there is this consistent shortage of supply. You can do it by yourself. It could be that OPEC decision to make sure that there's more supply cut to push the price of natural gas up, because it's been consistently under supply for a long time, shortage for a long time. And it's also sometimes politically, because The more they keep making the price low, the supply low, the more the price goes up, so that the dealers in the sector can make more profit. Now, what are we going to expect by tomorrow? Let me go to daily chart. The price is high, and the price and the trend is bullish. Take note. No, on that note, we just had, we said we should follow trend. So trend is bullish. Look at it. So it means that any little drop on natural gas will be a sign of buy. Here was highest, the previous support. And what we will do here, you could do it by yourself. Mensa, you can do it. You have done it before. I don't know whether Alice is here. We do data analysis on price action. Try to know the average price movement on sell and average price movement on buy on natural gas. That is what we will do to be able to know the point we'll be buying and the point we'll be selling. But I don't think it's hard, because of when you check from here and here, then you see that the market went up. Then it dropped from here and here. Then went up here. So the biggest price drop was from here and here. So we can be able to know on average how does the fall happen before it rise. So from here you can see how many pips. We may be able to draw our cursor to know the price. So, but for the sake of proper analysis, you can do like 6 months or 1 year. That's the 133 pips. Here, it dropped to 157 pips. Here, it dropped to 174 pips. Here was biggest drop, which was 307 pips. Here is Okay, I was checking the price of £10. I was not checking the other pips. This is 0.59 pips. So now it's then, but the rising part is much longer than the falling part. So here is 1,288 pips. Here, when it fall and went back again, it rose straight to 1,154 pips. So do you understand what I'm doing? I'm trying to check the average movement for buy, average movement for sell. Anytime that it dropped, at what extent does it occur before going up? You don't understand? So now you can use that as personal research to know this is. So you can go back to the previous chart, like 1 month history, try to know how it has been performing on the low and how it has been performing on the high. And it can never see you and change. It's like it can never just see you that it's started investing on natural gas and the price will change. No. So trend is one of the things we follow in the business. So technically, if tomorrow report is also bullish, like the report is under supply, it means the price of natural gas will go up. Then we also use the same strategy we use on crude oil to buy natural gas. Technically, here may be the major entry. 3.864 will be the major entry. But exit entry should also be here, because here is the highest point of exit. I'm like the highest support, unless if the support is broken. So, or maybe there may be more drop down. So what I'm trying to emphasize is that any drop down is opportunity to buy because the trend is bullish. Do you understand?
Yes.
Tomorrow I will trade natural gas. I don't have position on it. I will make sure I trade it tomorrow so that we can trade together. I don't know if I will be chance. I will be on live. I've not traded natural gas for a long time, so I will trade natural gas tomorrow and see. But technically, but on demo, let me even see how their volume operate, how their lot size work. So from here, I will answer your question now, Cynthia. Let me use 10 lot. 10 lot supposed to be okay. 1 lot supposed to be $10 per movement. Let me click buy. Yeah, and so this is 10. Okay. The 1 lot is $10 per movement. Mhm. Okay, let me check the spread. Here, the spread on natural gas is high. You also need to consider it on the broker you're using. Look at it. So selling is 4.112 and the buying is 4.123. I think their gap is much. Look at what I was charged. I was charged minus 260 something. So you consider it on your broker to know. You know what I mean. So it's also here. You could see that the buying price is 4.121. This is 4 point. Oh, why this one is the selling price is 4.1110. That is how many pips? About 10 or 15 pips different. Yeah. So the spread is up to 10 pips spread or more. Yeah. Yeah, about 11 pips spread. So you need to consider the spread your broker is giving to you before you place it. So let me check what it means. Most broker will give the same thing. So it means that one volume will give you $10 in value. One volume will give you $10 in value, and on 10 lots may give you $100 in value. Let me know. Yeah. 10 lots will give you $100 in value. So you shouldn't go on that if your account is not big. That means 0.0. That means 0.1. That means 0.10 will give you $10. No, will give you $1 in volume. Let me check. Yeah, it gives $1. Yeah, it gives $1. Look at it here. $1 in value. But why is the spread is so high here? It's supposed to be it's supposed to be 11 pips. Why are they charging me $22? That's $26. Is it up to, is this up to 26 pips from here? 1.08 and 1. This is 11 pips now. Or anyway, it's a broker's deal, so it's up to them. I'm trying to show you what you should consider in the broker you are trading all this instrument with. That means 0.01 will give 10 cents. Buy. Let me check it. Yeah, 10 cents. So 0.01 will give 10 cents, which is the least volume you can use is 10 cents on natural gas. So make sure the broker go to your brokerage website and search for instrument specification. You'll be able to see what the volume they give, or you can just experiment it on demo first to see what they give. Then you now know how to allocate your lot size accordingly. I don't know if there's a question on natural gas because we're moving to inventory. And okay, let me answer your question, Cynthia, before we move to inventory. We have about 15 or 20 minutes more. Your question is, how do I calculate my lot size, right? Any question? Be typing your question, or you can just ask for question. Because I'm experimenting something how we can invest in natural gas. So Cynthia, am I able to answer your question now?
Yes, sir, you can.
Okay, share what I'm typing. You asked me how do I calculate my lot size.
Yeah.
Let me use account of $1,000. If I have account of $1,000, my risk is 2.5%.
Yeah.
Let me make it maximum. My risk is 3% risk. I'm talking about my own. No, you may not use it. I think you see what I'm typing.
Yes, sir.
this is how I trade. My risk is 3% on any position. So, but this 3%, sometimes I do only 2% or 2.5. Now, so if I use 0.01 volume, and okay, let me, this is my risk, and my SL used to be minimum 250 pips.
Okay.
Yeah, my TP used to be empty, 0. I don't need to take profit. I said that several times. You must not use it, but if you like it, you can copy it. You're allowed. I mean, you can copy the way my risk is. This is how I place all my trade. It's on few occasions I can put 300 pips. It's on few occasions, but I already have it. Now it means on this setting, if I place buy or sell, let's use oil or commodities. Do you know why I say so?
No.
Because of this 0.01, it gives me 10 cents. I mean, it gives me 10 cents per movement.
In oil?
Yeah, in any commodity.
Okay. In any commodity.
Yeah, in any commodity, whether gold or oil or any commodity. But on forex, it's about 1 cent. So I'm not going to use this 0.01 on forex.
Okay.
So now let's calculate 10 cents times 250. Do it by yourself. If you have access to maybe your phone, you're not using to connect.
Fine. 10 cents, yeah. I think it's about 25 or something. Yeah. $25.
Yeah, $25. So I will have $25 if I place a trade and it cut at loss. I will have minus $25.
Okay.
And what do you think that would be $25 in percentage to $1,000?
That's 2.5%.
Yes. That's how I calculate my risk. I don't risk up to 5%.
Okay.
Now my maximum position, this is not new, this is over 8 years, that's how I trade. My maximum position is 2 positions. My maximum position, maybe I can't type again or what? Okay. My maximum position is 2. Okay, I think I can't type again here. Yeah, this is not a proper place to type. So, okay, I think you have copied this one now. Let me start another one. It's also recorded anyway, so you can see watch it. So my maximum position is 2. It means if I place down my buy, which I did that day with you guys, I will not see anytime I share a screen and you don't see multiple position.
Yeah, you already have one.
So that my buyer places today, I want to place another one, which is at 250 or 300 pips away from where I placed the first one.
With the same percentage risk, or
yeah. This is a fee, it's a constant thing. I don't change it.
So the previous one, you said you had changed the buy you had yesterday, right?
Yeah, that buy now is 1%.
Yeah, so you now complete it with the remaining 2%, or
no? Each of my position is maximum 3% risk.
Okay.
But remember, I can use 1%. Yeah. Now that my 1%, assuming the account is just $1,000. So what I have to do to achieve that 1% risk is now I will reduce my take profit, my stop loss maybe to 150 or 125. Using that 0.01. Now I do that a lot when I'm not confirmed was a good entry. Like I want to place first trade, I want to like observe the market. Then I put, so now even if I had that loss, it will be 1% of the capital I'm trading.
Okay. And if the trade decides to go your way, or you've confirmed that the trade will go your way, will you now complete the remaining 2%?
Yeah. If I confirm, I don't stack much, but I can only stack only one. Do you know why? Because of the portfolios I'm trading, the maximum drawdown they give to me is 30%.
Okay.
A drawdown means if you lose this one 30%, I will take the money from you. That's what I mean by drawdown. And then now the other one, the minimum drawdown they give to me is 10%.
Okay.
A drawdown means if those money lost up to 10%. So because of that, both this one of 30%, I give myself overall 10%.
Okay.
Yes, this is what that maybe I promise the company my drop down is 30%, or they told me 30%. I personally give myself overall drawdown 10%. It's not pro firm. So you know, some of you are used to get angry with pro firm giving you drop down. I don't know whether I'm not referring to you personally. I don't know whether you want to lose all their money and be happy about it. They give you like 10%
No, sir,
drawdown.
we're not angry now, because in real life situation, even if it's investors' money, you're still going to have a drawdown at the end of the day. So we're not angry. It's just when it comes to all this,
No.
and all this hidden agenda, you don't even know. It's when you want to withdraw profits, they don't tell you that, oh, you broke this rule, you broke that. But if it's drawdown is straightforward. Everyone knows there's a drawdown. But all these hidden rules, hidden agenda, that is where the problem is. It's Yoko.
They don't have liquidity. They want to collect your money. They don't have liquidity. That's what they started giving excuses. If it's real profit, they will be happy that you make real profit. There are a lot of things that are happening in trading that people don't know. If it's real profit, they'll be super happy. Do you understand? Because you're making profit for them.
Yeah, and then you're getting a profit split. So why shouldn't
yes, they should be happy because their liquidity is growing. But because that is not, they don't have liquidity. That thing is it's not that they don't have money that's covering it. How will somebody in a real sense be angry that you make profit and you'll be happy that you lose money? And they know that technically, you know that if you're making profit, there's no way you will remain in that broker. And they just want you to lose so that they will now start campaigning for another set of traders to come and trade. Asking to buy another account. That is beyond this thing. People need to know more about this. They don't have liquidity, and if they are more popular, they don't have liquidity. Any trade broker or pro firm that has liquidity will be happy at profit. Because let me tell you something, that volume you are seeing on your single interface may be double of what they are getting on liquidity. Do you understand? So by the time you have made a $100 profit, they have even made maybe $150. But you're only showing $100. Do you understand?
Is it that I kind of like copying your trade or what?
No, that's how liquidity works. If you know, I have about 4 brokers before, then it's about 3 now. So now, if I connect you to my liquidity, I may give you 0.1 volume. While on my liquidity is 0.10. Do you understand? So now I may give you 1.200 leverage, where on my liquidity is a different leverage. Maybe it could be high, it could be lower. So sometimes I have to give you much lower than what I have on liquidity. So if I have 1.200, I may give you 100. Now, remember, I also have what is called markup spread. So when I charge you, like when these people now have charged me about 11 pip, that's like a markup. for them. The liquidity may be giving them only maybe 5 pips or 6 pips, but they charge us 11 pips as we are here, because demo and live is the same thing. If they are regulated, they don't change them, they don't change it so that if you go to live, you see exactly what I seen on demo. So now this is our added profit. So where you are making like 10% on your own account, that money on liquidity has already gained 15% or 20% or 18, or depending on the markup they are giving. It's another layer of risk management so that they always have more money to pay. So what you're gaining is not exactly what the entire liquidity flow is gaining. Do you understand? So when you make like 10% profit, your account become 1,100 on liquidity. That account, that particular money, maybe up to 15% profit, but what you see on your own is 10%. So technically, so the broker that runs that pattern will always be happy for you to make more, because you're giving them more money, and they're also making money from your volume.
But
sorry?
Yeah, sorry. Okay, finish. Yeah.
No, I'm almost done. So I was just waiting to say something.
Okay, I wanted to say share is not for those that are having winning trades. All this one is for people that are winning now. Okay.
Yes. If you are winning, that's why people will be happy. Sorry?
What about people that are losing, Uncle? Like
people that are losing, liquidity owns the money. If you lose money, liquidity take it, like JP Morgan, for example, take their losses.
Oh.
Yes, and it's not the broker. The broker we have liquidity on the New York stock market, JP Morgan, CME, and all of that. Yeah, I mean, I was the first in the year to launch MT5 and the ebook. That was 2019. I don't know if I was anybody, but I think I was the first then. So the one I connected was direct exchange directly on private exchange in London. In London, I won't call the name because it's big, so I don't want to call the name. In London, that was my first. So now, when you're making the money, the people who pay you, who you are getting from their pocket are liquidity banks. Do you understand? So you are getting, because of they have excess money, it's difficult for you to liquidate them. So they may have like trillions of dollars, for example, like GFT have 2 trillion. Also, they have aggregated liquidity. AvaTrade has a lot of. Let me not just comment. Some of these things, they have like aggregation. They have more than one liquidity. Like it can be on JP Morgan, it can be on Seabot, it can be on maybe which liquidity provider is common. Goldman Sachs. Do you understand? So it's not even one liquidity, and all these people has trillions of dollars with them, and they have access to that liquidity because you have what is called like what is called aggregated liquidity. Your API is connected to multiple sources, so it can navigate order flow, like buy and sell flow to different ones depending on where you want to balance your risk. Do you understand? As a trader, as a broker. Now, brokers will not be happy if you are losing more, unless they will just charge you only on the commissions level. But they know that if this investor keep losing, one day he will go. So because of that, such type of broker, we want to give you any kind of support, whatever thing they can do possible to make sure that you keep winning. Because the more you keep winning, the more this loss size, and this my 0.01, I keep increasing it. The more I keep charging, and the more the liquidity is also increasing. They're making more profit. Unfortunately, most brokers you have access to that place may not have that kind of liquidity we are talking about. So that's why a broker that does not have liquidity will not be happy when you're losing money, because you want to take the money you're losing.
Yes.
Pro firm by law are not financial institutions. They are not financial institutions. So they can't be licensed. And because they can't be licensed, they can't get liquidity. Because for you to have liquidity account, you must have an authorization. It must be a licensed or authorized investment dealer. That's why no pro firm can get liquidity. No, unless a broker that has a license that form liquidity, that form a pro firm, and then they can by themselves take the risk and connecting some order flows. Order flow means buy and sell, as I said before, to their own liquidity. But you see, all this independent pro firm that doesn't have any brokerage may not have liquidity. That's a problem people are facing, and unfortunately, I cannot change it because it's like a cancer. I mean, it's more popular, so only me cannot change it. It's not possible for me. That's why many brokers feel happy when you lose. Technically, who does that? Who should be happy that their investors are losing money?
Yeah, because I was even wondering when I started trading, and someone introduced me to prop firm. I'm like, why is this so free? Why am I using certain small amount of money to get big amount of money? You know, like if it was that easy, I mean, everyone would have cashed out very, very easy. You get what I'm saying? And then if you go through brokers, you have to use your actual money. So I'm like, why is there so much difference in this? Okay, so this is it, right? Okay.
Yeah, it is. Then even the pro firm there is actually a copycat of the real pro firm, in the sense that proprietary trading firm is structured to be that there will be a team of investors who will provide money for traders to trade. Now, the pro firm platform will regulate it, putting those limits. So technically, that money is supposed to be real money or credit. You understand? Either real money, cash somewhere, or credit that represents real value. And now it has to come from a liquidity provider. I mean, connect the liquidity, so that when you make profit, imagine now you give a pro firm account, you make $10,000 profit. That pro firm should be very happy because they're gonna get $3,000 from it, and the liquidity will have to pay you $7,000. But where you make profit, they're going to tell you stories. It means something is fishy. Let's just be honest with it. It's as simple as that. Any question? And thank you for it. Have I answered your question concerning the loss calculation?
Yes, sir. Yes, sir. 100%.
So you can use that system now to scale on your loss calculation, because on Forex, if you use 0.01 on Forex, like 0.01 is like 1 cent. You don't understand? So it's like 1 cent, and if you use one lot, it's like $1. You don't, which on commodities is a total different thing. On commodities, we almost run out of time. Today we are having inventory. We are no money on inventory report. We have 2 days ago there was no forecast. Okay, when I was with the US and Canadian students, they saw it. There was no forecast. I think you guys were also with us. There was no forecast as of Monday. So now they're expecting another shortage, another supply, not like minus. They're expecting like 2.5 million, and it's coming up in the couple of hours from now. Last 3:30. Please check your own time. It could be a different time from your own time. So it's coming up at the normal time. Now, we have had consistent supply on oil of recent that have already crashed the price from where's oil from almost $79 per barrel to $68. I placed my first buy here. Probably it has got at loss because I did not close it. I placed my first buy here. Maybe it has not. I don't know. My first buy was here that day. So it went up yesterday, then later crashed. So I told you that guys, you have to plan to trigger another buy between this point. Unless because of based on price action movement, it has crashed from this point to this point. That's almost 1,000 pips we discussed. But technically, it has broken this particular support. There's a breakout. Here was our support, if you can remember. We said if the support did not break, that means it will go up. So it has broken it, and the only last support we have is this one, is 67. 67 is the only last support, which is between this area. Understand that it must not hit that particular price. We're talking about zone. You see this zone now, it is this zone. Sorry, I did not draw this properly. I'm so sorry, I have a very poor drawing skill. You see, understand that when I circle all these things, it does not mean that it must hit that price, but we are referring about zone. the areas it will reverse. You see this area are good because there are prices inside all these areas. There are prices which good price. It may even reverse from here. But take note, like I told people from the United States, I can remember that statement I made it to them. Take note that if the price is low and there are more supply, it can also push the price up. Do you understand? If the price is low and there are more supply, it can push the price up. Most investors like to buy product at a low price, and especially when that product is more, they can buy it at a low price. And there's fundamentally bullish sentiment coming up in the oil sector. So now what we're gonna do, for me, if the invited report is oversupply, I'm not selling.
Sir, please come again.
For me, if the report is small supply, I'm not selling.
Okay.
Check it now. Somebody may ask me why.
So what we've been doing?
I will either leave the market or I will look for a point to buy. Don't joke with support and resistance and lower price. Don't joke with it. No matter, not only supply and demand, as supply that control the price. If the price is so very low, and they keep supplying, be careful selling there because the market may rise at any time. So now, what I would do, if we see a shortage, it will be so happy for me. By 3:30, maybe we see that inventory decrease. Oh my God, I will not buy more. One, that I've gotten two confirmation. That confirmation is one low price. The price is low. Two, there are supply shortage. Then, if I want to add technical reasons, I can check technical indicator. It was in this class. We brought out stochastic indicator. It shows extremely oversold, right? It was in this class. STO. Okay, SO. Yeah, it was in this class. Where is it? Yeah. Yeah, look at it. Okay, I think not in this class. It should be in this class. Yeah. So you could see that it has literally gone oversold on a daily level. So I'll be careful consistently buying, selling at a low price. I'm always conscious of that thing. So I can leave it for a while, then later I will be able to trigger, because 68 and 66 is almost the same, which is certainly a lower price of oil. What I was trying to say that oil will definitely rise, as is within this area, it will rise. Any question? Any question? Okay, so there's no question yet. So we also analyze on Euro USD, a sell on Euro USD. Nothing much, but there may be movement tomorrow and next, because the month is ending. There may be movement because of it's ending of the month. So some companies want to close their balance sheet and stuff like that. So what I'm saying is that what we analyze on Euro US is still valid. For now, is valid. Then Canada is no more valid. We analyzed the breakout on Canada before, but I think last week on Monday I said that breakout is no more working. That somebody, if you want to buy, you should buy here and put a stop loss here. I look at it. I don't know if any of you saw that analysis. So that breakout is no more valid. What is valid is a buy, and it most likely go back to this point. Then which other one did we analyze? We analyzed gold. Yeah, so gold. Our analysis on gold still stand. Nothing will change it. We said any drop we buy. So you could buy gold maybe within this current price, or within this area. But for now, we don't have any chance of selling gold unless if the trend change. Once the trend change, then we can now start. Remember when I say buying gold, avoid buying it at a higher price. I mean, at the last price, always buy on a drop down. Once there's a drop down, then you buy. Well, and again, you can know the measure of drop down from the previous one. The highest drop down was this one. These are small. These are the level of drop down. It's not always big. Look at the trend. They always have small drop down. Now, this is another bigger one. This is another bigger one. So it's most likely going to continue. Yes, past performance is not a guarantee, but sometimes it works up to 70 to 80% that it can repeat itself. So drop down on gold is not too strong. Any little drop down, we can trigger a buy. I'm not sure sellers are making more profit on gold than buyers since this year or since mid last year. I'm not sure, because the dominant force is bullish. So people who are buying gold are making more profit than people who are selling gold. Any question?
Mr. Uche, please, I have a question.
Okay.
So for gold, are we saying that we're still maintaining a bullish trend even with the correction that we witnessed yesterday?
Yeah. Our analysis on gold is still maintained. But look at what you mean. Are you on it now or you're not on it?
I haven't put in a buy yet.
Yeah, now there's a drop down here. I'm not sure gold will come to this price. I'm not sure. So that's why we said either you buy at this price. Our analysis on gold is one. If gold retrace, we buy. You don't understand? So if you want, you can put a pending order within this area, or you can have a small entry here. Definitely, you may be waiting, thinking that this price will drop more, or only for you to see it go up, then hit this point, then continue. Because that has been the pattern. I mean, it will retrace a bit and go up. It will retrace a bit and go up. So any little retracement, we look for potential entry. Here is a potential entry. This price, and it's also connected with this particular price. Here is also entry like that, but assuming a drop further, another potential entry is this area. Obviously, big entry is this area, but how are we sure that this thing will crash back to 2.6? No, but I will make a research today on that and trying to give you guys how you know the mining demand of gold. I may send it on the group chat. Then it's a public information, so anybody can be able to access it. I don't know if I answer your question correctly, clearly, or it's a bogus answer.
No, it's clear, sir.
Okay. So how many of you is on live account? Do you understand what I said I will do on oil?
Yes, you say if there are more supply, you are not selling. You wait, leave the market.
I'm not selling.
Look for opportunity for buy.
Yeah, I'm not going to sell oil at 68. Nothing. I'm not going to do that. You can sell low. You can go to 60. Fine, but no problem. Nothing will make me sell at a low price. For me, the price is low. For me.
Mr. Uche, I also observed that the price of oil has gone back to the low point as of last year.
Yes.
So the price action movement that we noticed is actually on point.
Yeah.
It has actually dropped about that 1,000 points that we noticed.
Yes, 1,000. So that has always been the average movement. Now, because of that now, that's why I said I don't want to sell oil at the least price. Even government are not happy that the price get to that point. And government are the one that's responsible to push the price up. Remember. So I have to support government here.
And then you said something about the long-term factors that you talked about, I think last week. It all favors bullish as well. So yeah.
Remember about oil. Oil does not need news to fall. Okay. Does not necessarily need news to fall. Yeah, it needs news to rise. Like the bigger oil sector are concerned of bullish. Investors sell off at any time when they make profit. That's why it's easy for oil to fall even without the news.
Okay.
Do you understand now? But now, as it's falling, the next thing is that it will rise. The next thing is that it will rise. So at this point, it has gotten to where it was last year. Nothing will make me sell it. Any further drop on oil, you see it on the news. Either OPEC is calling an emergency meeting, or what are they going to do, or whatever. It's a simple thing. It's not even an MT14 thing. No, it's a proper deal. The low oil price is not good for the world. They want it to be at a certain price.
Okay.
Because I'm dealing based on experience. I may buy there, I may keep selling now before I know what's happening. The market will now get me trapped. So I will rather find my way to buy and extend my stop loss because of that. What is called putting a stop loss. Let me show you something. You may even have forgotten. Yeah, time remaining 2 minutes, but I don't know. Let me show you something. On chart. Let me go on monthly because let me check weekly or monthly. You see weekly chart here. You see this point here?
Yeah.
Like 64. They are off market price. I mean, as of now, since how many years the market never get to that 64? The highest was here. So I can rather place a buy and extend my stop loss down, put it off market. That's what I would, I mean, if you keep falling 67, whatever, I can put my stop loss. This is from here to 64 is about 400 pips. Yeah, 400. Just I can rather put my stop loss outside where the market have not gotten to for a long time. Yeah. So that no matter what, I'll just leave it and go and sleep. And even if it hits 400 plus, remember, I'm talking about myself. My risk is maybe 5 or 4% total. It will happen, but nothing will make me start buying oil selling oil at a lower price. No, it's a bad market for me. I mean, I don't want to have bad experience. Like look at it now. This is 2022. Here is 2022 market. Look at the price too. So and the market is also there. So see, I mean nothing. I'm just saying it, but now let's just hope what's going to happen. Technically, fundamentally, if the report is bullish, it will be good for us. But if it's bearish, fine. We can still maybe stay away from the market and find our way to buy. But let me also say something. When I say I'm not selling, is that I want to buy. The price is good. Yeah, that's what I mean. And that's why I said I don't want to sell. Where I never put my trigger to buy a second one is because of the inventory report coming. Otherwise, I could have bought this market and put my stop loss and adjust my stop loss. They leave it. I just want to wait for the inventory. That may also be the reason why the market. This is 12 o'clock now. The market is still here. I mean, nothing has changed. Maybe the whole world is waiting for what these guys will bring as a report. Then the price will start moving up. Any question? Did you get value today? Or does it make sense today?
Yes, I do so. Thank you.
Yeah.
We have
Thank you.
We have two tests now. We have done introduction to natural gas, previous analysis, and the current analysis on oil. So any of you that want to set up accounts, let us know. We can be able to. Please, you have right over your money, but if you are a student, you shouldn't make some mistakes. If you want to open with any broker account, feel free to contact us. We're not after your money, so we can help you look for that broker and know whether they are okay for you or not. And then if you still want to set up an account with any of the brokers we are using, then also feel free to contact us. Then we can help you on that. That's what you paid for.
So I hope to contact the customer service. They say it's not their job to tell us about broker, show us broker that we can use.
I say if you want to, we don't necessarily say use this one. If you say I'm doing this broker, is it okay? Then we can try to check it out for you and let you know if you can use them or not. Yeah. Do you understand? So this is where we end for now. Tomorrow we have another class tomorrow. If you are free, you can join us. It's for both paid and free students. It's a webinar on automation. We are trying to make sure we keep promoting automated trading for now. I see, because of this manual thing, it's not like that. Things are changing. Since you have started learning trading, you start looking for how to automate it. Yeah. So if you have any further question, you can drop it on the chat.